Good morning, everyone. Today is March 25th, 2021. This is StockCast, your pre-market show. I am your host, James Mason. With me is Todd Derby. Todd, how are you doing this morning?
Doing great. Doing great. Had a tough time sleeping last night. All I heard was that noise.
Oh, man. I'm telling you. I'm sure our members were like just fanatic about that. I mean, really, there's no other way to put it.
Yeah, that's right.
I mean, golly, I can't tell you how many messages I've received. I'm glad that so many people can benefit from. We all know what ticker APOP, and so, anyways, before we get into all that, let's yeah, kind of stepped out of track here. So, all right. So starting off pre-market, Dow futures are currently up 49 points. S&P 500 up currently 0.625 points, and it looks like it's going to be a choppy one coming out of the gates here, guys. So watch those positions, keep those sizes small, and when you have profits, never be afraid to take profits. So without further ado, let's talk about APOP. All right, so we've been waiting for this thing to do whatever it was going to do forever, it seemed like. Overall, we started trading APOP back in November. We've been in and out of this ticker, man, probably 4 or 5 times. I can't even remember now. But this last go around was literally all in, baby, all in. And man, boy, did it pay out. Now, the news that it released yesterday was about a merger. It had nothing to do with the news we was actually waiting for. We was waiting for the top line data, but nonetheless, when you are given opportunity, you seize opportunity. And that is what the majority of us done. Now, looking at APOP, I pretty much say this run is over. We may have it chopped around in here for pennies. Kind of hard to tell at the moment, but overall, once you had that initial spike and then you had that secondary one, it usually dies off after that. Which also, if you look at the RSI, this is a RSI bearish divergence. So you can see it right here. So the sharp spike in the RSI, PPS value right here, and it comes back up here. The RSI is not quite as high, but the PPS value is higher. And that's when you know it's going to die off. So that is ticker APOP. And man, everybody who's been in this one and helped through it, payday, baby, payday. So let's see. Let me know in the comments if you were in ticker APOP. Go ahead and just hit some keys on the keyboard. It doesn't even matter what you hit anymore.
So right. About APOP, we're looking for some top line data. And last night I was trolling around the internet, and I did hear one interesting theory. And again, I'm not pumping APOP. I'm not propping it up right now. I'm completely out of APOP personally. I don't think I'm going to get back in. But they think the merger news was announced beforehand because the data line news is going to be very good, and they might drag their feet on that until they get this merger dotted and inked, and then they'll release that and give their stock a real good pump. So that was an interesting theory. And then I saw another report that put this merger deal, APOP's valuation around $4.80. So,
yeah, guys.
I didn't crunch the numbers myself, but that's what I'm just repeating something I read.
All right. So, guys, keeping all that in mind, just remember, while you are waiting on these news catalysts and whatnot, if you have the opportunity to make money, make that money. You necessarily don't want to just keep waiting and waiting and waiting, just trying to get more and more out of it. Because you never know what you can actually end up getting out of this if you actually wait on news. If you think about a lot of these tickers, especially these pharmaceutical bio stocks, when that news drops, it will pop up like that and then fall off immediately. So you have to be, always watching these things. 2, perfect opportunity to trade this thing. It almost hit our overall target price, my overall target price. My overall target price was 10.05. And just because I call out a target price like that, it doesn't mean that I'm holding until it hits 10.05. No, I'm moving my stop loss up. I'm going to take opportunity. I'm not going to let my profits just slip away from me. It's always about locking in gains and progressing in your portfolio. But, it wasn't the news that we were waiting on. So we are still waiting on this top line data. But just keep in mind, guys, if they do release that top line data news, that doesn't mean it's going to run. This thing had a spike. Now, when they do release that news, yeah, it could crush through its pre-market highs right here and do whatever it may. Then again, because it already made a push and people done, made their money on it, may not even do nothing. So this was the opportunity we were waiting for. We got it. Me personally, it's time to move on. So that is APOP. I will wrap this chapter up with APOP. I am done. Happier than a Johnny Walker on a Waffle House IPO day. That's right there.
Good call, James.
Appreciate it. All right. So let's look at ticker TELL. We had this ticker pop up in the chat this morning. So just looking at the daily chart right here, and fundamentally, we'll hit it real quick. Last update, short interest, 27.15 million shares shorted, 10% of the float, days to cover 1.8, share structure, outstanding shares, 386.5 million shares, float, 268.5 million shares. So we do have a decent amount of shares out in the market. And let's see. Just skimming for some catalysts real quick. So just looking at headlines there, I see a ton of filings, but I'm not going to dig through them right now. Overall, let's see. So we do see it trying to make a recovery here from this large gap down, but this thing is probably going to trend sideways. What I would look for here is how it holds up above this 200 EMA, this green line. And the last thing that I want to see, I don't want to see this white line, this 9 EMA line, cross below that 200 EMA line. When that white line physically crosses, it ain't going to turn out well. You do not want to be caught in these crossovers if you're long on this, just because it's going to pull down more. Now, if this line actually holds above this, and I don't care about the candlesticks, I care about the line itself on whatever time frame that you're looking at. But here I'm looking at the daily chart. If this non-EMA on the daily chart does not cross below that 200 EMA line, I'd be cool with it. Again, I don't like the share structure, and I'm not in this trade. It's really too many shares out in the market for me for what I like, and I also don't see any catalysts. But if I was going to trade this thing, I would wait for it to, let's see. One second. I'd wait for it to break above 304. Stop loss would be 259. overall target price would be for about 470 to 475. And when I say this, that would be like in a picture perfect world for me. Again, I personally don't like this share structure, and I don't see any catalysts to make me want to jump into this. I'm just breaking this chart down, but this is what I see. I would see looking for an entry at 304 with stop loss at 259 and an overall target price between 470 and 475, just based off of technical, analysis right here. And this is ticker TELL. So Todd, let's talk about the SPY chart.
Because we're getting people talking about the market and are we heading into a correction? And I think going on a SPY and what will SPY look like if we truly are in a correction or not. So I think it'll be a good conversation. Then we'll review a couple tickers that we've got on the list here.
So for everyone who's watching right now, this is SPY chart this is the daily chart, and I already have the support and resistances drawn out for this. So what I would look for here is watching this non-EMA line, the physical line, not the candles. I want to see the physical non-EMA line break below, for the bearish side now, break below 385.64. So be this candle, this support right here. When we see that physical non-EMA break through that, that's when I would take a smaller entry for a bearish play here. So buy and put contracts, or just using this as an indicator as the market as a whole. And then if it broke through 381.28, then I really know what's up. If it breaks through 381.28, we have an easy range down to 370.83 right here. And then we'll start flirting around with this 200 EMA. And if we get to the point to where that non-EMA crosses below that 200 EMA line, this is what it will look like back here. Something like this. This is obviously the whole pandemic thing. But let's back up. To be fair, let's back up a little bit more to something more natural. So you can see right here, it breaks below that 200 EMA line. It comes back up. It tests it. It gets rejected. It comes back down. It can't get back above that 200 EMA line, and then it just dies off. So this is what a bear market will actually look like. Currently, we're not in a bear market. A lot of traders are freaking out, talking about how horrible the market is. Truthfully, it's because they are over leveraged right now in their trades. They're all in on one ticker, and that ticker is going against them. And they're mistaking that as we're in a market crash. We are not in a market crash at the moment. Not saying that we are not going into one. I'm just saying technically it's not there per the charts.
So we're not in a market crash, but James just outlined some signals or clues that will give you warnings that when we're headed there. So as this 9 EMA line breaks below 385.64, you start thinking about some of your positions. Do you start trimming if you're in some profit? Do you get some cash ready for some buyback opportunity? So you start thinking about your portfolio or your investment strategies based on what SPY is doing.
And so, that's a good point you just brought up, Todd, about buyback opportunities. So when do you start actually buying back in? Well, I'd say pretty much the best way, and let's see. Okay, so pretty much, in my opinion, the best way is, one, you need to see where your non-EMA at. Your non-EMA is at in comparison to your 200 EMA line. If it's way up here and it's selling off, going down and touching that 200 EMA line, then you just kind of watch it, because you don't want to see that non-EMA break through that 200 EMA line. You want to see if it's going to consolidate kind of like this back here and then bounce and come back up. But when you are watching for this setup and you start to see this like consolidation like this, the next thing you want to do is wait for that candlestick for whatever time frame to get back above that non-EMA line. So there's two parts we're watching here. First, we're physically watching the non-EMA line to see what it's going to do. We're looking to see if it's crossing over that 200 or not. If it's not crossing over yet, and then we have consolidation on those candlesticks, and you're waiting to buy back in for the opportunity, well, next, wait for that candlestick to get above that non-EMA line. As you can see right here, this is what we'd wait for. When that candlestick closes out above it, we have confirmation that this is probably a decent area to start scaling in. So you can see how this would have worked out. You would have had a couple days moving up here, and then it does pull back down. But the overall trend, we still have not broken through that 200 EMA line. Now, going back here to something drastic like the pandemic, non-EMA breaks through that 200 and it unloads. Well, as it unloads, you have other indicators to start kind of looking at here. You can look at the RSI. When the RSI on the SPY or the Dow futures, anything like that, when it starts getting just so oversold, then you kind of know what's up here. The SPY in these larger like futures, again, like the Dow Jones, they don't tend to really get oversold or overbought too much. And that's actually a good area to focus on to kind of start looking for a reversal, or at least a temporary reversal here. So we can see like the grouping down here. I mean, all these candlesticks are just grouped up. And what we'd wait for then is the candlesticks to close back above that non-EMA. And that is a sign that this is starting to want to reverse. And we see it here, kind of dip back below, but nonetheless, it's still in that grouping. It's going sideways here, and then it commits and recovers. And I know that's kind of a simplified way, guys, of when to know. And every stock will be situational. But if you're focusing on a ticker and trying to figure out when is the best time to buy back in, look at its history. Look at what it's done in the past and go back to when this like pandemic has started. See how it responded to these significant market events, and that will help you determine, okay, is this potentially reversal? Should I start scaling in? And if you make that determination, don't forget, this is the key part here. Scale in with a smaller position size. I personally, I have this strategy where I take my overall position size or dollar amount and I divide it by 10. And each part of that will be an entry. And if I can get it to work out, on 3, 4, 5 entries and it takes off running in my favor, perfect. The whole intention here is not to make 10 entries. You don't want to do that. If you make 10 entries, it's not going well for you. So hopefully that little tip helps you out, and just keep that in mind. So Todd, let's hit a ticker or two in the comments.
Yeah, I'm just going to final little thought there. Going back to APOP as an example, if you trust and believe in the data or the news that you're waiting on, I know a lot of members scaled in on APOP and got a better average because the ticker was bouncing around and nothing really changed fundamentally except we just hadn't got the news. So if you trust and believe the news, there's some opportunities that are available for that. And yesterday, the bio stocks got hit hard. I've got a swing portfolio full of bios, and all but one of them are red. And the day before that, they were all but one was green. So there's some great buyback opportunities right now if you believe and trust the data. So with that, a ticker that was asked about yesterday was ITRM, ITRM Therapeutics, and they've got a couple things come up in the marketplace, and it's a ticker I'm in. My average is $1.70. So just to give you a perspective, $1.70. It's trading right now around $1.44, $1.43, and it's got two. June 2nd, they have an AdCom meeting. And for those that don't know what an AdCom meeting is, it's an advisory committee meeting with the FDA. And basically what they do is they sit down with the FDA, they show them where they're at with their data, their information, and what's going on. And the FDA will give them a vote of confidence, or the worst case scenario is they give them a letter that it's not really positive, kind of sends them back to the drawing board. But that AdCom meeting kind of clears the pathway for, and the PDUFA is the Prescription Drug User Fee Act that allows them to get approved officially by the FDA, and their PDUFA date is July 25th. Companies don't schedule AdCom meetings unless they're ready to present solid data, solid information to present to the FDA. So they don't waste dollars and time to go to AdCom meetings. Not all AdCom meetings are positive. Sometimes companies have a vision or an idea of what they want to take place or what's going on, and the FDA has a different opinion of that. But most times when they're going into an AdCom meeting, that is a positive sign. So ITRM's got those two dates. There's a couple analysts out there that have had a target price of $250 on this ticker, and that's not with the PDUFA date. So I think this is a ticker that I've shared with our membership, and it's something that I will be adding a few more shares, if not today, in the next couple of days. So that's ticker ITRM.
Cool story, Todd.
Yeah.
So anyways, I'm just messing with you.
I know. Actually, to be fair, this was James' idea. This was James' idea for this ticker. So let me just.
No, it wasn't. No, it wasn't.
So when it goes, James will get credit for it.
No, it wasn't. All right, let's look at ticker ENTX. Let's see this one in the chat. All right. So on March 12th, they released their findings for positive top line phase 2 data. And fundamentally, short interest. Last update, 1.5 million shares being shorted, which is 24.5% of the float. Days of the cover, 0.2. Shares outstanding, 18.2 million shares outstanding. The float, 6.3 million shares. I love this float, but the only thing is, we already had the catalyst take place. We had the catalyst take place. It popped up. It did its thing, and then it's selling off. You know, people are taking those profits. Before this thing turns around, it's gonna be a long while. Since they just released that catalyst for that top line data, and again, I don't know everything that this company has going on, but they're gonna need something else to really save this and create a new high here. Now, when will that be? Don't know. This thing really hasn't been out on the market for too long. It looks like it just IPO'd here about mid 2018. Yeah, so really this is its first true pop. So if you are in this one,
this was a biopic that I shared with the membership a little bit back ago, and we benefited from that pop. The catalyst has come. We'd have to look to see what's on their agenda, their timeline. And another piece that we want to look up for is what's their cash like right now. Because a lot of these bio companies, they need money to continue the research and development. So it's real common that they will run a stock up, and they'll do an offering. Fully expected. And sometimes these offerings aren't a bad situation because it's getting them to the next level. So I'd have to take a look at their cash before. For me, I'm not interested. I got enough other bios going that it's not one I'm interested at this time to get back in at.
All right. So there's a question for ticker DU. Excuse me. For ticker DUOT is moving up nicely. Will I be scaling up? No, I won't be. So DUOT is a very low float on a daily chart. It has been pushing up pretty well, and I don't know how accurate those earnings are. Like I said, I did release them. Honestly, I'd start moving up my stop loss on this. So we've been in this ticker for about 1.5 points now. It slowly has moved up, and I don't think this one is going to hit my overall target price. But this move has already been made, so it's not worth jumping into now. But I would actually start, instead of scaling up into it, I'd actually start looking to go ahead and locking in profits here overall. Again, this thing does have lower volume. It slowly has moved up, but nonetheless is moved up kind of easy. So you can see how
I sold my position last weekend. I had a small position. I closed it out for profit.
So you can see how these little hashes, these are candlesticks. You can see how really the volume is just low on it. 200 shares, 300 shares, stuff like that. So again, this is one we have been in for a little bit now. It was definitely one not to take a heavy position in and just let it do its thing, and it worked out. Slowly pushing up, I would look to take profits and move on to the next one.
Yeah, so a couple thank yous, James. JJ, appreciate the tip. And tip jar, and Charles, same thing for you. Couple new tippers this morning.
Oh yeah, thank you guys.
I'm sure that's because of you're sharing some of your APOP winnings, so greatly appreciated. Thank you guys.
Y'all, just want to let y'all know, I see that it came through as $5. There's probably like an edit feature, and I think you missed some zeros in there. Just joking. All right. Let's see. Let's take one more ticker, Todd.
Take a look at Mark, M-A-R-K.
M-A-R-K. All right. Last update, short interest, 7.5 million shares, 8% of the float, and 1.6 days to cover. Outstanding shares, 99.5 million outstanding. The float, 93.6. So pretty standard share structure here. See if there's any catalyst. Just skimming off the top. Okay, looks like there's just kind of just some normal business stuff going on. I don't see nothing too significant. Looking at it, looking at the daily chart. So what I worry for here is, look at this MACD on the daily chart. Deeper candles, which obviously we can see that sell-off right here. And then it shadows out and it's starting to get a little bit deeper again. The reason why this setup is so bad is because these smaller candles that will take place here usually creates the biggest impact. And what will probably happen is this setup will go sideways, fake a lot of people out thinking a reversal, and then it's going to just shoot down. As that probably happens, that 90 EMA is going to cross over that 200, and it's just going to give up a lot of its gains, and hopefully it doesn't do something like this back here. That is what I would worry about right here overall. kind of really hard to say, but this chart doesn't look too good. I mean, we see the spike back here, this run, and it really wasn't much longer later. We have a secondary run. And at this point, this thing is probably going to sell off for a little bit before it comes back and makes another run. But that's just what I see in this ticker. This ticker MARK. I personally don't like it.
I'm not in it either. I don't.
Yeah.
It.
So hopefully, I'm not sure what your plan is for the member who submitted this comment, but hopefully your average is somewhere right around here, pre-market highs around 225.
All right, let's wrap up.
Yep.
Happy trading, everyone. Be safe, and I really appreciate the comments. A lot of the feedback today was good, and there's quite a few tickers we didn't get to because of time. So maybe tomorrow we spend a little more time on more tickers. We got a little wordy on a couple things today, but we'll spend some more time on a couple extra tickers tomorrow.
All right, guys. So again, the key is smaller position sizes, scaling in. Cannot stress that enough, and it will change your trading career. So keep that in mind. Appreciate y'all, and we will see y'all in the next one.